The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 24th, fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, truly, that's what it's all about. It is Fantastic Friday. Let's make sure we have a fantastic weekend. And let's go take a look at one of our tools. This is the tool I call, well, and others call it as well, do what you love and love what you do. Or said another way, work is love made visible. Now, Thomas Edison, he often ate and slept in his laboratory, and he worked 18-hour days. However, Edison is often quoted as saying, "I never worked a day in my life. It was all fun." I have the same feeling. I work all kinds of, I invest all kinds of time, taking a look at the markets, my newsletter service, but I don't believe that I've really worked a day in my life. Others, they would say, my goodness, how is it that you can say that? You know, folks, do what you love and love what you do. LBJ, he loved his work. When LBJ was the Senate Majority Leader, the Senate worked hard and late, something that they could do now, I would say. You know, his colleagues would complain. They would say, hey, Rome wasn't built in one day. Of course, my take on that comment would be LBJ wasn't the foreman on the job of building Rome. Otherwise, it might have been built in one day. I say, love what you do, whatever you do, and it will be like a vacation. Now, what I find interesting about the word vacation is it's just simply one letter away from the word vocation. And quite frankly, the Latin root of the word vocation, I feel like we're at my big fat Greek wedding. If you ever saw that movie, you know what I mean there. But the root of the word vocation is to call. So your vocation is actually calling you to find your work, which in the end will help you to find yourself. So vacations or vocations, they call you, right? Vacations, they call you. Vocations, they call you. No wonder Edison didn't feel like he worked one day in his life. No wonder I don't feel like I've ever worked one day in my life. You know, there's great examples of folks that are focused on their vocations. Vocations. Most surgeons are so focused on their vocation that the healing energy of the universe flows right through them and into their hands. How about assembly line operators? They can have the satisfaction of knowing they contributed to a finished product. The Wright brothers, they love the idea of flight. Their vocation produced the first airplane. A vocation, folks, is more than just putting in hours to earn a living. A vocation, quite frankly, is your most valuable asset and the greatest gift of yourself and your talent that you can offer to the world. Find your vocation. Find your vocation, and guess what? You'll be on vacation the rest of your life. Always remember this. What's talked about is a dream. What's envisioned, it's exciting. What's planned becomes possible. And here's the key. What's scheduled, folks, it becomes real. I also want you to remember that no man, no woman is happy unless they've found a way to contribute beyond themselves. I say schedule your happiness by contributing to others. And lastly, this is how you want to kick off your weekend. Remember, if you can't, you must. And if you must, guess what? You can. Identify your problems, but give the power of your energy to the solution. 5% of your time on the problem, 95% of your time on the solution. That alone, folks, will change your life forever. Yes, do what you love and love what you do. I'd love to hear from you. Our call number is 877-927-6648. Give us a call, folks. Happy to take a look at your stock chart, answer whatever question I can. Right now, we've got Dow futures trading off 103 points. They're trading out at 16,046. S&P futures are down about 13 points. They're trading at 1811 and a little bit of change. NASDAQ futures off 20 points, trading at 35.93 and change. King dollar flat at the moment. It's up 1 penny. It's trading out at 80.54. We've had a lot of movement in the currency marketplace. The Japanese yen, the Great British pound, the Canadian dollar, you name it. We got currencies moving all over the place. There was a big movement in the euro. We'll take a look at some of the currency pairs. How about the hard currencies out there? Goldilocks right now is up $5. It's trading at $12.67. Intra-session so far, the high's been $12.73. Silver up 15 pennies. It's trading out at $20.16. It's been up as high as $20.28 this morning here. Light sweet crude is flat. It's trading at $97.92. It is not flat in natural gas land. It is up about 4.5%, a little over 4.5% right now, up 21 cents. Trading out at $4.94 out there. A quick peek around the globe out here. Let's see what happened over in Europe or what happened in Asia last night. In Europe right now, the DAX is off 122 points. It's down about 1.25%. The FTSE down 1% off 65 points. The Nikkei off 304 points last night, about 2%. The Hang Seng off a little over 1.25%, down 283. The Shanghai hanging in there, up 0.6%, up 13, closing out at 2149. So where do we begin our day in bisecting and dissecting the markets? Of course, I stole that from the one and only Tom O'Brien. Let's start by taking a look at the weak link out here. I think that's where we've got to start. The weak link clearly has been the Dow. Now, I've got the 30-minute chart on my screen. We're going to take a look at the 30, the 120, the daily chart. We're looking at the futures contract. If you're listening on your mobile device at TFNN.mobi, we appreciate that. Radio station, we appreciate that as well. Remember, you can catch the live stream of this show by going to the homepage of TFNN.com, upper right-hand side. You'll see a button, 3 little smartphones on it. Click on that. This show will stream live to you. You'll be able to see our charts, and, of course, the archive of this show is on Channel 9. So the 30-minute chart that we're taking a look at, if we go back in time would be to December 31st as the Dow was making its high. The Dow futures, as all markets were, well, not the Russell 2000. Russell 2000 made its high a little early. But the Dow, the S&P, the NASDAQ, they made a high on December 31st out here. That was out at about 16,540 or so, coming in on the December 31st out there. Now what we have seen here, we've seen a 1 to 1.272, A to B equals CD down. Your A point was the December 31st high. Your B point was the measured move of the break of the consolidation. You see, the Dow futures had a 160-point consolidation. When they finally broke through that, they made their move, which was to 16,179. The exact 160-point ticket is 16,176. Close enough. So that's your B point, which is 16,179, the low at 4 o'clock in the afternoon on January 13th. Make a retracement. Try to get all the way back up into the highs. They run into the resistance of the downdraft that began on January 2nd. They run right into that. That forms the C point. And now what they've done so far, and you can see that that price here is traveling on the left-hand side of that C to D leg. It says that the C to D leg is actually stronger than that A to B area. So the Dow futures are at a critical area. That critical area being 16,031-ish. I say ish because we only use, these as guidelines out there, just like they do in that movie Pirates of the Caribbean. So we're going to find out if there's pirates in these markets out here. At 6:30 this morning, we saw a low come in at 16,011. That's going to be the important, we'll call that the important support level unless we see some type of bearish reversal signal. We do see the bulls here. They are trying to defend this area. Nice little bullish engulfing candle at 7 o'clock. Sort of really confirmed because we, even though you saw a lower close at 7:30, it still maintained the integrity of that bullish engulfing candle. So 16,011, an important area. Also happened to be the 1.618 expansion of a set of swing points. That was a swing point at 2 o'clock yesterday afternoon till this morning at 6:30 out here. So that's what so we've got some completed patterns out here. We'll know soon enough whether or not the market wants to make more than the 1 to 1.272 A to B equals CD. It certainly's got the strength here, and what I mean by the strength is the move off of that C point is strong enough to say, what it wants is 15,905. But as is so often said, on the Sports Center out there. Not so fast. Not so fast. The 0.618 retracement, by the way, of that entire move off of the lows out here, that came in at about, 9:30 or so. Let's see, 10:30, I think is the right time, and December 15th. If you go from that low to the December 31st high, 15,964 is the number. So if this area here fails, meaning that 16,011, expect price to try to find some support right around 15,905 to 15,964. So you got about a 60-point swing out there. Now that is on the 30-minute chart. Let's go step over. Let's see what the 120-minute chart shows here. Now, if you're watching us on Tiger TV, you're going to see that there were some nice lows put in on December 16th. As that was occurring, we saw a price relative strength divergent pattern out there. We got a nice three-river morning star pattern that actually completed right at the time frame of 4 a.m. Market moves up, and makes that price relative strength divergent pattern up at the highs out here, up on December 31st. You gap down on that January 2nd. That is a reversal candle out there. So you have that pattern. Well, what is it that we've got going on right now? Well, wouldn't you know it, folks, we've got on the week index out here, we've got that price relative strength divergent pattern. Now, we do not have, I say it, I underscore, I say it as loud as I can, we do not have the reversal that is required in order for this pattern to be valid. What we do have is we've got a signal coming out of the week index out here. If we see as the market opens, and I expect, maybe a little bit of a push out the door out here. But we'll see if the bulls are going to come in. And, folks, if we do in that first, hour or so of trading, if we see it close above 16,110, if you're short, make sure you've got some tight stops in place out here, because you would be getting the same type of signal that just simply put in a nice bottom back here in December 16th of 2013, as well as the same type of signal that put in a high inside the Dow futures on December 31st. 877-927-6664. It is Fantastic Friday. It's a little bit frigid here in Florida. I hope it's warm wherever you are. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow futures off 108 right now. S&P down 12. And had just a quick email from a listener subscriber. Just asking about the 5-point reversal pattern that is shown inside the Dow on a monthly chart. You know, Larry Pesavento trades this pattern all the time out here. And, it's so we've got 1 month here, right? We are January 24th. So you got 31 days in January. So a week from today here, so next Friday, we're going to know whether or not this we're seeing any kind of a toppy action. Now, I'm taking a look at the monthly chart here for the Dow. If you're watching us on TigerTV, and you're going to see a couple of different patterns out here. So let me describe, and then we'll go back and we'll take a look at the daily futures contract out here. But as we take a look here at the Dow monthly chart, you'll see a large yellow rectangular shape out here. That's the consolidation pattern. That's a 15-year consolidation pattern inside of the Dow. It really began going back into the 1997 time frame. We saw a break of that pattern. That was back in 2006. Price moved up until it made that bearish reversal signal, that price relative strength pattern, just like we took a look at on the 120-minute chart for the Dow futures, how it's been great at calling tops and bottoms. Now, you've got to have reversal signals out here. Just be, any pattern, folks, you do, whatever trading system it is, strategy that you use out there, don't just be a tactician, because tacticians will get slaughtered. Be a strategist, and a strategist will meld two different patterns together. You've got to have a signal out here. Just because you have an expansion of a swing point doesn't mean it's going to stop there, because it can go on to the next level. Heck, it could go on forever, quite frankly. You've got to make sure that the bulls and the bears, whichever side of the trade you're on, are giving you the signal that you've got the coast is clear. If we do take a look at these highs out here back in 2000, for example, you had a price relative strength divergent pattern. You finally got the confirmation, and that was on January 31st in 2000 out here. Well, we got the same type of pattern. We got the confirmation that took place, and that was in November of 2007. Yes, the high took place in October 7th, or I believe out there. But for your longer-term asset counts out there, your IRAs or what have you, until you get that type of reversal signal. Now, both of those tops had price relative strength divergent patterns. And look, folks, we can go back as far as you want. We can go to the 87 crash, the 1929 crash. We can go back as far as you want. At significant tops, you're going to see this pattern. Guess what we don't have as we speak here right now? We do not have that same pattern. Does it have to occur? No, I don't say that it has to occur, but what will occur, even on this 5-point wave reversal, the only way that is going to work out there is for us to get some type of bearish reversal signal. That bearish reversal signal, it's almost in play here right now. In fact, what we want to be watching for a week from today, if in fact the Dow were to close below 16,087.12, and I'll give you the 0.12. Let's just call it 16,086. Now let's call it 16,086. Next month, this month, 7 days from now, if we get a close below that, that will be a bearish engulfing candle. That will be a signal. It'll need some follow-through. That means it'll need some follow-through during the month of February. The last time we saw a bearish reversal signal inside of the Dow, that was back here in August 2013. It didn't last. It did not get confirmed on that following month. But that would be your signal of this pattern. It does not have that price relative strength divergence that you'd sure like to see because it's present as you go across the board all the way back. It is the pattern of patterns out there in calling tops out there. So that's my opinion. That's how I read the charts. That's my study of the charts. That's my vocation, where I feel like I'm on a vacation because I love taking a look at technical analysis. Now, if we go back to the daily chart here for the Dow futures, and you should too, because it is the most fundamental thing that you could learn about trading and investing, and that is these technical patterns. Now, if we take a look here at the Dow futures, they're trying to push down to that 15,985 level. It's been as low as 16,011. So I guess we can cut it a little bit of slack, can't we? At 15,985, you've got an expansion of your B2C swing point, your B2C swing point being the low on January 13th and the high that came in on January 21st. If you take the difference between those two, you multiply it times 1.618, you subtract it from the high of January 21st at 16,489. That'll take you to the price level of 15,985 or so, right around that level. You'll see you've got a 0.618 retracement, a 1.618 expansion. This should be an area of strong support. So when you put together what we took a look at on the 30-minute chart, on the 120-minute chart, and now here on the daily chart for the Dow futures, you can see that it should be up against some pretty strong support out there. Doesn't mean that price stops here. We have not seen the reversal signal. It just says, caution, Will Robinson out there. And if this level fails, where will price go to? Well, it just simply goes down to that next level. The next level on the floor down would be about 15,807 inside of the Dow futures. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow trading up 107 points, trading out at 16,090. S&P down 11, trading at 1817. Composite trading down 21 points at 4196. Russell 2000 down 9 points at 1162. Apple off $1.23. Microsoft up $1.33, trading out at 3738. Google is off $7 this morning. Cisco down 10 ticks. Intel off 19. We've got lead the charge to the upside. You've got Synaptics, SYNA, up 8% this morning, up about $5, trading out at 61.80 and change. McKesson on fire again. MCK, it's up 2%, up $3.60. You've got Bio Delivery Science, BDSI, that's up 40%. Man, that thing is on fire out here. Don't see any news behind it. BDSI, I wonder if it was on one of my symbols yesterday. You know, I had a listener send me an email last night, asked me if I could take a look at the IBB out here. I ran one of my Rhodes Momentum Indicator scans looking for, now the IBB, it's the NASDAQ biotech sector. It's got 123 stocks in it. Of the 123 stocks, if you're watching this on Tiger TV, these listed here, I think it's about 25, 30 or so. These are the strongest bullish on different trend time frames, meaning weekly, daily, and the 120-minute charts. These are the most bullish of what makes up that sector. Just curious whether or not BDSI happens to be one of those in here. Don't even know that it's in the NASDAQ. I don't see it on my screen out there. Nonetheless, to the downside here, Intuitive Surgical lead the charge. It is off about $20 right now, down 4%. Kansas City Southern, KSU, that's off 14% this morning. I think they were out with earnings at net income of $114 million versus $93. Not too shabby there. Revenue-wise, $615 million versus $568. So beating top line, beating bottom line, and getting beaten up this morning out here. You got Kihu 360 Technology, QIHU, that's off $3. 3D Systems, that's down $373. Tesla Motors off $253. Train out at $178 and change. Let's go take a look at the currencies out here. We got a lot to look at, a lot to wrap up in the next 24 minutes, and we've got commercial time frame. So get to it, Steve-O, would you? If we take a look at the U.S. dollar, Japanese yen, we've got the weekly chart on our screen. If we look at just simply the last really set of swing points, not the entire pattern that I'm showing on my screen, I mean the swing point low from October 11th out at 96.55 to the swing point high that was put in on January 3rd, you'll see that this currency pair has hit the 0.38 day 2 retracement. 102.04 is the exact number. It got down to 101.99 out there. So that's what the weekly chart shows us here inside of the U.S. dollar, Japanese yen. Let's take a look at the monthly chart. Let's look at a couple different time frames out here. U.S. dollar, Japanese yen breaking above a descending price channel. It did it once before, which was back in 2007. It has now done it again. If the month were to end like this, that's not the type of bullish candle, because it isn't a bullish candle. It's a bearish candle. That would be the bearish engulfing. So if, in fact, the U.S. dollar, Japanese yen closes below 102.37, you're at 102.27 right now, and that's a week from now. That would, because it's a monthly chart we're looking at, you'd have a bearish reversal signal. However, not so fast. Not so fast, as my friend Lee Corso likes to say out here, because it has broken through this descending price channel, and as long as it stays above this area, it's actually doing what it's supposed to be doing. So it's broken above a long-term resistance line. If it comes back and it tests it, and it holds that area, then good, so be it. And if it doesn't, folks, just like it did back here in 2007, back in August of 2007, when it busted back inside that area, that says then that it could actually run all the way back down to the bottom of the descending price channel. I don't know whether that will happen or not. We'll just simply follow the patterns, but it's really just doing what it's supposed to be doing. Now, if we take a look at the daily chart out here, the daily chart says that the U.S. dollar, Japanese yen maybe wants to trade down to about 101.54 at 101.70. You've got a primary trading range boundary line out there. You've got a 1.618 expansion. It's only about a 50% retracement. That's coming off of a swing point from October 25th, 2013 out here. So there is potential for a reversal in sight. Don't know that we'll see that today here. Maybe it takes place Sunday evening, Monday or so. But that is that would be a Gartley. That would be the Gartley buy pattern. Remember, Gartley he never said that you needed to have a Fibonacci retracement line up with your A to B equals CD. So that would be your A to B equals CD down if, in fact, you get some type of reversal candle, and that is in the U.S. dollar, Japanese yen. Let's go take a look at the Queen Mum, the Euro U.S. dollar currency pair out here. That, as you can see, as I mentioned yesterday, a hard currency pair to trade at this time, because it's just traveling within this little cone. This cone here, this is set up by long-term resistance. That's the one that takes you all the way back to July of 2008. That's the red dark line going across my screen. What did the euro do here? Earlier this morning, it got up, it tested that area. It's not closed above that. This is a weekly chart that we're looking at. You can see the cone that the euro is traveling in. That's why I say it's a hard currency pair to trade, unless you are trading on some type of real intraday chart. 15-minute, 30-minute. Probably you don't want to get beyond a 30-minute chart out here. It's going to become even harder out here until we see the euro crack one way or another. But it is traveling with inside this resistance cone, the bottom of which is this little rising price channel that takes us back from the lows, the body of the low, the open. That was on July 27, 2012. That was at the price point of 1.215 out there. Let's go take a look at the Great British Pound. If we take a look at the pound out here, let's go see what it is doing. Give me a moment here to find that. The Great British Pound has been trying to break above resistance, but it looks like it's struggling. Here's the weekly chart. How strong are these resistance lines? I have to say, PDS out there, folks. Pretty darn strong. Take a look at this resistance. That's the black horizontal line going across my screen. We're using the high of January 22nd, 2010, 1.6457. You're just slightly above it right now. To me, even if it closed right here, to me, that's not really a breakout. We'll see. Now, if it can close higher, if it can close today up at its session highs, if it close, or session highs being the weekly high, which is right around the 166 area. Oh, you got a devil up there. That would then say, oh, it's devilish, and it's really trying to break out of this long-term consolidation pattern. But right now, struggling to do so. Of course, it's got some pretty strong resistance out here, and if it does break through that, that's going to send quite a message. And that message is, around the $1.82-ish range, because that would be the measured move of that weekly consolidation pattern that it has been traveling in for quite some time. Let's go take a look at the hard metals out here. Let's go take a look at hard currency. Let's look at Goldilocks and silver. Right now, you got gold up $6, trading out at $1268.40. You talk about trend lines. You talk about channel lines. We've got them all. Here's got the trend line inside of gold. You know, for if you don't, you should get access certainly to the gold contract, especially if you trade any of the gold products, the GLD, you know, any of the other triple ETFs, whatever you've got out here. If you take a look at, just make this easy for you, if you just take a look at the trend coming off of the swing point from August 28th high, 1434, even Steven out there, and use as your next touch point that little doji candle on October 28th. That's at 1361.80. You can see, if you use those as touch points, you can put those back in reverse and go higher, and you'll see that that is a strong trend area out there. If, in fact, and what we can see here is that gold here today is busted through that area. This is important because it is now busted through that area. If it can stay above that, it will not have, the last time that we saw that take place was back in February of 2013, nearly a year ago. So, if this area, if Goldilocks can stay above this, let me tell you, folks, that will be hitting the desk of traders around the world. Somebody will be saying, did you see gold? It broke out of that descending trend line. And that's where, folks, then you start to see, forget about the short covering out there, then you'll start to see buy orders hitting the screens out there because people will want to get in on that new trend out there. So gold, this is an important session here for Goldilocks. It's trading up $7 right now. As I say, the intra-session high has been 1273. If it stays above this level, 1333, 1361, I'd have to say 1361 is really on the horizon for Goldilocks. Let's go take a look at high-ho silver. Silver out here, not as strong as gold, but it can play catch-up. It has been traveling still in that $2.30 consolidation sideways range out here. Holding it in check happens to be the 50-period exponential moving average. Why? I don't know. I just know that it is. The 50-period exponential moving average, $20.19. You're trading at $20.18 as we speak right now. A break above the level of 2048, that's going to give you that measured move, that $2.30 move. That'll take you up to about $21.94 out there. You can see that also in check here is the trend line. That's the blue diagonal line going across my screen inside of silver. If we take a look at light sweet crude, having a flat session out here, down just slightly, down 17 cents, pausing here at the 0.618 retracement. No real bearish reversal signal, I should say here, at least as of yet, at least as of today. That says 98.71 would be next up on its agenda. It's at 97.17 out here. Let's go take a look at natural gas. Well, that's if we can see it. You got to get out your binoculars to see it because, you know, it was liftoff this morning. Well, it's off of its session highs out here, but you can see no bearish signs in place here. It's been up as high as 499.6 out here. This wants to move up to 5.05. Let's face it, it wants to move higher than that. And can you blame it? It's gosh darn cold. GDC down here in Florida. What is up with that? Of course, it's not that bad. We haven't exactly had... well, of course, it depends where you live in the state of Florida. Let's just say it's cold. If it's cold down here, it's got to be cold wherever you are. Well, unless maybe you're somewhere out west, maybe in California. It's a little bit warmer out here. But if you take a look at natural gas, this thing is still liftoff. It's off to the moon out here. It's off to the races. It's next up 505, and then beyond that, probably about $5.35 out there. Let's go take a look at some of these stocks that are moving and grooving in the marketplace here. Let's go see what we've got going to the upside. Let's see here. To the upside, you've got Open Text Corp, OTEX. What do they do here? They did a split of 2 for 1. Let's not take a look at Open Text out here. Let's take a look at Synaptics. SYNA is the ticker symbol. SYNA. And then, yes, you know, I do remember that email from last night. Somebody wanted me to take a look at the IBB, so we'll go do that as well. Synaptics out here trying to take out a swing point, doing it with volume, certainly has wide price spread out here. So far, the session low, 58.73, the high, 63.76. You're trading at 61.50 right now, doing it with 800,000 contracts, 800,000 shares. It's taken on a swing point with 1.4 million shares from January 17th out here. Let's put this on a longer-term time frame. Let's go see what Synaptics is trying to do. Well, there you go. You got it. We were looking at Synaptics at one point in time. Apparently, I was following it. stopped following it for God knows what reason, because I certainly don't, because it was traveling in a 19-point consolidation range. So let's go check out the measured move out here. Let's go see if it has completed or if it is completing that. Remember, these measured moves, it's equal to or greater than is what the measured move is. So it broke out of that consolidation. It did it here September 20th, 2013. Maybe the reason I was following it is never came back to test that area. You can see here it has made that measured move, so it is completed that 19-point consolidation range. Those consolidation patterns, folks, they are beautiful things. You want to go try to identify them and find them, and then learn how to go ahead and play them. So here's the measured move on Synaptics. That doesn't mean that it can't move higher. Remember, that measured move equal to or greater than the actual consolidation range out there. Let's go take a look at let's see here. I've got equity showing up on my screen called CareCom Inc. Initial public offering. We won't go take a look at that. You've got Kimberly-Clark out here. KMB is the ticker symbol. Let's go see what it is doing. Maybe they were out with numbers here before the bell. Maybe it was after the bell last night. Kimberly-Clark, they did net income. Well, let's take a look at their revenues here. Revenues of $5.3 billion versus $5.3. Not a big deal there. Net income looks like $539 million versus $267. Hey, those are some good accountants out there. That is some good accounting out there. They've been able to double their profit on the same sales revenue out there. Kimberly-Clark, let's go take a look and see where it is traveling up into, trying to take on a swing point high out here. This little key reversal session, it was a reversal session for sure. That was on November 15th. That high is 111.68. Looks like you are trading inside it here right now. Let's go see what kind of volume it's going to have to deal with as it tries to take out that key reversal session. The volume on that trading day was 3.3 million shares. Today, you are up into that area with 436,000 shares. Quick math on that. 1.2 times 6. Yeah, it's got the volume if it can keep up this pace out here to take that on. A close inside 108.28. That automatically guarantees. Of course, it's not a guarantee you can take to the bank, but it is a pretty good guarantee. It's one that says it ought to go test 111.68 out there. Let's go to Rich in Orlando. Rich, thanks for calling. Thanks for holding. How are you today?
Doing well, Steve. How about yourself?
Good. I didn't realize we were going into a hard break, but when we get back, we're going to go to Rich in Orlando. We're going to take a look at ERY. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow trading out at 16,097. S&P trading at 1815. Dow's off 100 points. S&P is down 13. We're going back out to Rich in Orlando. We're going to take a look at ERY. That is the Direction Shares Energy Bear, 300% move. And Rich, good to hear you. Happy New Year to you.
And Happy New Year to you also.
Thank you so much. So are you long the ERY?
Yeah, I had gotten in at 2150, so I was pretty fortunate on that. I was looking for this, but I was happy to see the breakout here. Just a question as to what your thoughts are on this particular scenario. I mean, what are your thoughts on it?
Well, the energy sector is one of the weakest sectors inside the S&P 500, so you are playing in the right sandbox, in my opinion. In fact, what I was trying to run here during the break, I think it just finished. The XLE, which is really what Rich is basing his decisions on inside of the ERY. And what I've got up on my screen, I've got my Rhodes Momentum Indicator Market Analyzer, and right now it's got all the instruments inside of the XLE, which is 44 instruments in here. So here's the page. It's got everything in here, and I can just simply identify which ones are truly the most bearish. So you always have the option of, playing either the actual sector, like Rich is, the ERY, or you can go and you can try to find the weakest element if you're going to go short, which in essence is what Rich is really doing out here. So out of 44 equities inside of the XLE on a weekly, daily, and 120-minute time frame. So to include the weekly in here just shows you how bearish this is. It looks like you've probably got half or more of those equities in a confirmed downtrend out here, in a confirmed sell mode. So that is that's the bullish side out there with regard to the energy sector. If, in fact, this market does not make a reversal, which I believe it's trying to do, now we'll just see what happens at the end of the day here. You could have an A to B equals CD up. I would imagine you've calculated that. That would take you into about the price level of 23.21 out there. You're at 22.26. Was there a target that you were shooting for? Are you looking at, what's your length of time on the trade, Rich?
Well, it's a short-term trade. I'm just looking for actually, what happened was I had sold all my silver and gold stocks here this last week, and was looking for the counter play. And I thought that this looked like it had some possibilities. And so I'm not planning on sticking around very long. I was actually hoping for a little bit more of an expansion, and that's where my problem comes in. I tend to get too greedy, and so I'm just trying to get an idea as to what a conservative upside move might be.
I'm sure. So I'm looking for the potential for a reversal out here. I don't know whether we're going to get it today, whether we're going to get it at all out here. But if we do take a look at the XLE, one of the things that you can consider out here with regard to the move. I think if the market's going to crater, you're in the right spot. So that much I believe. It's just simply the one that is showing one of the weakest areas out there. There's the XLP, I think, is truly the weakest of all of the ETFs out there inside the sectors of the S&P 500. I've got the rising price channel coming up for the June 2012 lows out here. This is the daily price channel. It's broken through that price channel here as we speak right now today.
That's the XLE that we have on the screen, right?
It is, yeah.
Yeah, okay.
Yeah, so that's a bullish thing for you. If you see this thing sneak back inside that rising price channel, then maybe we've seen the reversal that starts to take place inside the Dow or wherever it might come from. It'll probably be the NASDAQ that reverses and leads things up, because there's a bullish and bearish fight going on between the Dow and the S&P 500 versus the Russell 2000 and the NASDAQ out there. One last thing, if we put the weekly chart's also going to show that it has broken a trend line out here on the weekly chart, and that's what it's doing here right now. So the XLE, if the market's going to crater, you're in the right space. All right?
Appreciate it. Thank you. Have a great weekend.
Thank you so much, Rich. Everybody out there, look, stay warm. And look forward to seeing you Monday morning bright and early. Stay tuned. The Bull Bear Nadex Binary Option Hour is coming up next. Have a great weekend, folks. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.